Hello there, Maverick Currency traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and we are heading into another weekend. This is the Currency Room. All right, so let's talk about where we are. We are right in the middle of holiday trading. We're going to be discussing holiday trading quite a bit in this episode. We are always going to go back to the previous week, check out what happened, what were the stories. Big changes in inflation last week. Very big changes. We're going to talk about those specifically. We're going to take a look at the current market. We're going to score all of our currencies from +3 to -3. And then, of course, we're always looking to pair up the strongest versus the weakest in our trades.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
We had more gains in equities. So this is the third straight week with gains in equities. And the big story is the bonds. The bond yields have just fallen apart. After being at 5% and the market was freaking out, we're now into the 4.4%. So much, much weaker for bonds. The dollar has also moved significantly lower. And we've seen, again, just a lot of relief. All of this has been really good for the stock market. The stock market wants lower rates, lower dollar. And the stock market has definitely responded with a nice rally here. Let's go in and take a look at the calendar. The things that just jump out at me is take a look at this CPI. Look at the numbers. All the numbers were better. The month over month is at 0. The core is lower. And the year over year is lower. Everything looks better. And then we got the PPI here. And look at this. The headline number was down 0.5%. Now, a lot of this is due to energy prices coming down, but this is an absolute win for anyone who's been saying that the Fed has done it, that they have gotten inflation under control. And this is proof to anyone who is still fighting, saying inflation is still a problem, it's higher. Guess what? It's not. Now, look, I do know this is only one. We've seen the trend coming this way. Yes, it could change in the future, but right here, right now, the inflation story is pretty much over. Ankit, what do you think of what I just said? Are you on that camp as well?
Absolutely. And I must say that it's just not the US phenomena, but it's the world phenomena. Because if you take a look at inflation numbers outside of the US, it's the same story playing out. The biggest one is the UK, the British pound. You know, that was the most stickiest number. I mean, in the last few months, the reason why pound has done so well is their inflation was just stubborn. And you can see that the numbers, I mean, this is not the first report. I think the last report was also below expectation. So we are seeing this across the world. The Canada's the inflation numbers are weaker. Out of New Zealand is weaker. So I think we are seeing this just across the board, that the inflation numbers are coming lower. So I'm on the same camp with you.
And I'm going to point out just some numbers here. We're seeing the other economic numbers still holding in pretty nicely. Take a look at the nice employment report out of the Australian dollar here this week. Everything is still looking okay, and inflation is coming down dramatically. So that is showing up in the market, and not just the stock market, but it's showing up in the bond market, it's showing up in the currency market, and it even showed up in the crypto market a little bit this week. This is where we ended the week last week. We liked Bitcoin long, and we had the dollar, the Swiss franc, the euro. We're at +2. We said, hey, look, if we continue to get more rallying, we are going to see this change. These should back off a little bit, and we should see the growth currencies like the Aussie and the Kiwi pick up nicely. But at the first of the last week, this is where we were. So let's take a look at where the market ended the week. Let's first start off with the numbers. We had a 2% return in equities. Remember, this is on the back of 7% over the last 2 weeks. Gold had a really nice week. Oil down 2%, but it had about a 4% bounce back on Friday. So at one point, oil was getting absolutely crushed. And I want to talk about the cryptos. Actually, I'm going to wait till we get to the cryptos to talk about this, but they had a down week. Nothing great going on in the crypto market. Let's jump into the S&P chart because this is what it's all about, the charts. And after a little pause here and a breakout, we are having a little pause here as well. And look, it's happening exactly at a resistance point. So the same thing we saw a week and a half ago. We got up to a resistance point and we hung out around that point for long enough to build some momentum to break through. Here we are doing about the same thing. That being said, I do think that we are in a different level here. This is a lot more substantial resistance than this point was down here. We are going into a holiday weekend, and holiday weekends generally tend to be bullish weeks, especially on Friday. And we're going to talk about Friday is of all of the days of all the years in history, the Friday after Thanksgiving is the most bullish day on a percentage-wise, meaning it closes up the most percentage time as any other day. Don't get too excited because the average close is like 0.1%. So it's a very, very small. So it has the greatest likelihood of being positive, but it's not a real big return. Using those numbers, looking at this week, we're right up against a resistance point. We know that this week is likely going to be positive, but it's likely going to be not a big return. I think you can make a really good case for we're going to base. We're going to base here for the next week until Thanksgiving is done and we break higher. Okay, what do you think about that for a call on equities?
Absolutely. I mean, looking at the technical, I know we look very bullish. We look at the RSI, we are getting the overbought territory. But one of the key number to look at is that we are up 9% in the last 3 weeks. We started off this month in a negative note, but then again made a big recovery since then. So statistically, we are already at the upper band of that outsized move. So the big question is, how far can it go? And I think this is where to get long further from here, the risk to reward doesn't look that good. I personally would love to see a base, especially going to next week as we get a holiday shortened week. I would love to see a bit of an energy gathering before running even higher. Can it still push higher? It absolutely can. But I just think that we are at this key level up so much in the last 3 weeks. It needs to take a little bit breather. So I would rather wait for a setup to build up rather than chasing a move here. I think this is where we get a lot of FOMO, a lot of fear of missing out, a lot of chasing, and I think that's exactly where we are at. So these are the areas we need to watch out for.
And I think that is really good advice because, look, we had these big moves. And during the periods of consolidation, we don't get big moves. So again, big move, consolidation. Big move, we're expecting consolidation. That means that this week we are expecting consolidation. Now, we have liked the Aussie quite a bit. That has been our favorite currency over the last 2 or 3 weeks. We still like the Aussie and Kiwi. They still look to be really good, but again, they've had big runs as well. We've talked about how much we like the dollar and the yen short. We like the yen even more than the dollar, but you can see this week with the inflation numbers coming off, the dollar got absolutely crushed, and the CAD went along with it. The CAD and dollar are correlated at this moment. As you can see, decent returns out of the European currencies. I think this trend lasts. I think it lasts. I think, again, Aussie is going to continue to be the best. I think Kiwi is probably the second best. And then we have our group of European currencies. And then you want to be short CAD, dollar, and yen. I think this stays in place. However, I don't think you're going to get the kind of moves we got this week. I mean, look at euro versus dollar was 2%. That's a huge move in euro dollar in a week. I think this week it's probably well under 1%, but I do like these trends to stay in place for this holiday week. The story in cryptos is an interesting one here. Now remember, the cryptos turned well before the market. The cryptos started getting strong about 4 or 5 weeks ago. And then once the market started to get strong, the cryptos lost their momentum as the money went elsewhere. And that's exactly what's happening, is that this money is going elsewhere. Crypto's had a huge run. I mean, Bitcoin's gone from 28,000 up to 38,000. Look, we're in a pullback. Money's likely going to continue to come out. But at some point, cryptos are going to participate again in this risk-on move. Let's see what our market scores are going forward. We have the equity market scored at a +2. +2 on the equity markets. If we go in here, take a look at the bonds. The bonds, low based, and then broke down below the bottom of the base. So bonds look to want to continue to go lower. Now, they're not going to go substantially lower because this bond yield will go lower only when there's a panic. When people are really panicked, they're going to really get aggressive in buying bonds, which cause the yield to go down. Right now, we're just getting a backing off. This chart is telling us that yields are likely to go a little bit lower, which again is very, very bullish for all asset classes that are bullish asset classes. Here is crypto. And look, when you take a look at a big picture, we came up, we based, we broke out, and you can see we've just fallen back into the base. Cryptos are still bullish overall. You cannot deny that, but at the moment, they're just not participating right now. So we need to wait for them to participate. Once they begin to participate, then alone, we can actually make some trades in crypto. This week, surprisingly, we actually have a decent week this week, even though it is a holiday week in the US. Let's first of all take a look at Canadian CPI. Now, if this follows the trend, this should be weaker than expected. We'll have to wait and see. But again, a weaker than expected report would be bearish for the CAD. We are already bearish, the CAD. So I think this is a decent trade early in the week on the Canadian dollar. On Thursday, we get manufacturing PMIs out of Europe. Now remember, this is heading right into the US session, which is still going to be open, but it's going to be dead. Again, the stock market's closed, the bond market's closed, everyone's on vacation. I don't like this trade setup, trading off this news report, because literally once this is done, there's nothing going on after that. So really, to me, the only news report of any notice that you need to really watch out for is the Canadian CPI on Tuesday. Let's take this opportunity to talk a little bit about holiday trading. What happens? So look, I think Monday, Tuesdays are going to be a fairly normal week. Wednesday is going to start to slow down. Thursday, as I said during the US session, is going to be very, very dead. Very dead, and spreads are going to widen out. And then we have a half day open on Friday for the stock market. The Forex market, again, we only get 2 days off of the entire year. That's Christmas and New Year's. So it's not one of those two, so the market's going to be open. But how do you trade? How do you trade? Now, if someone said, I just want to take those 2 days off, great, that's fine. But what we usually see is that there are a small amount of people that are still watching, still trading, and they will get behind a currency and kind of push it. And I'm going to say most of the time, it's the Kiwi. Most of the time, the Kiwi is the one that gets all the people that are still around trading. I really like the setup this week for Kiwi. I really like, we're going into a holiday week. People are going to be hyper-focused on this one currency. It's been the Kiwi in the past. I actually think the Kiwi has a decent chance to be a good trade this week. So let's take a look at all the charts. Let's score everything, and then we'll make our trading entries. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? I'm going to go through crypto, and Ankit's going to go through Forex. I'm going to go very quickly here because, look, everything is just basing. Now, I want you to just notice how it's basing. Crypto is basing, but it's kind of getting higher. Sorry, Bitcoin is basing, but it's kind of basing higher. That's actually really good for continued movement up. We have Bitcoin Cash. It's basing, but it's kind of basing lower. It's going lower. So you don't want to be looking at Bitcoin Cash here. We want to be looking at which one is actually basing with some strength. Ethereum is straight up pulling back. So again, bases are stronger than pullbacks. So Ethereum on a pullback, I just don't think that's where you want to be. And then going over to Litecoin, it's also going down at the bottom of its base. So look, when we take a look at these four cryptos, it's clear to me, crystal clear, that Bitcoin is the best crypto, but it is just not ready to go at the moment.
All right, let's take a look at the currency basket. So looking at the US dollar, again, this is one of the charts that we talk about how this has been stubbornly bullish since July. And even if you take a look at the last 3 weeks, it's been quite a fluctuating week between that 1 to 2% range. So again, big move. So here we are. We had a massive move on Tuesday with the CPI. So since then, we have only consolidated. So this is, again, a good sign because it's just gathering energy. We haven't really recovered. So if you take a look at how we moved just a week ago, we had a nice pullback, but then we just rallied for 4 days. Okay, this time, we are seeing a base. We are now seeing a bear rally. This is a small consolidation pattern here. So if we break below that area, I would really like this to be on to the downside, especially if you take a look at a lot of the dollar crosses. They are sitting at some key support and resistance, just like that currency basket. So I think right now, if we really have to, take a bet, it's mostly to the downside, then it's the upside. But you got to realize that it's consolidating. It can go like that for another 2-3 days. So you got to be really patient with consolidation and only jump in when the currency basket is breaking lower. So I don't have a signal yet, but I have the support in place. Upon confirmation of breaking the support, I would love to get to the downside. Now, yen is the other stark comparison that we have made with the dollar. And we have talked about over and over why you want to be short the dollar when yen looks the best. And you can see the yen did plummeted lower even after the CPI numbers. This remained weak. But look at the last 2 days. Last 2 days it rallied. So the dollar yen was the most, I've talked about dollar yen as being the key level at 150. As long as we're above that 150, I think there's better chances to go higher than lower. But interestingly, now we are below that 150 level. So again, looking at this chart, this is again sort of reaffirming that the dollar might want to go lower. As we look at the charts, I think the dollar definitely looks more weaker to me. So I think that this is finally the first time that I can say dollar looks more weaker than the yen. Now, looking at the Swiss franc, you are seeing a rally, but again, it's not as bullish as the euro is, which is again a comparison change that Swiss franc usually outperforms the euro. And again, you can see that this is better. So even though they have the same sort of a trend score and a velocity score, I think overall the euro just looks much better. With less pullbacks and more stable. So I do like euro going next week. A lot of the euro crosses that we've been close attention to. Now, comparison to that, the British pound, I actually don't love the British pound. I mean, take a look at that chart. This is slowly creeping higher, a lot of back and forth, not a consistent price action. And remember, if you want to see a consistent move, stick with things that are moving consistently. This is not the one. The inflation pulled back. We have the economic numbers pulling back. Even though it's still staying positive, I want to touch it. I think the euro probably better compared to the pound. Now, in the currency baskets for the growth currency, let's just start with the Canadian dollar. Now, the Canadian dollar, as Rob said earlier, this is more in proxy with the US dollar. And there are times where they deviate from each other. September was a great example where it's just the Canadian dollar actually did outperform the CAD, the US dollar. So here we are. They're kind of doing the same thing. But if you take a look at now, CAD actually looks more weaker than the US dollar. This thing is already breaking lower. Again, another catalyst for the Canadian dollar is the oil market, which has been really weak. So right now, I think I like the CAD again further to the downside. any rallies that we're getting are just shorting opportunities. This goes also in line with the seasonality pattern. Usually if you look at last year, CAD and the dollar, they both struggle in both November and December. So this is kind of going in line with that. -2 on velocity, -2 in trending score. And this again makes a great pairing, especially comparing to the euro. Now, Aussie and Kiwi, and I know we are kind of juggling between which one looks the better. Remember, there's a lot of times that Aussie and Kiwi just does the exact same thing, so it doesn't really matter which one you go long. But lately, there's definitely a lot of back and forth happening. And I think I do like Aussie more than Kiwi. Rob, if you compare to even like last year, I feel like there are years where sometimes the Aussie is the outperformer and sometimes the Kiwi. I think this time is the Aussie. And I know last year we had a massive rally in the Kiwi in November and December. I think this time your Aussie is the one looking better. Aussie Kiwi, we'll look at in a bit, is looking better. So I do like Aussie to the upside, especially if we break above that 76 area on that currency basket. I think we can go higher. And the velocity is also supporting that because we are consolidating. Now, comparing that to the Kiwi, we did go higher at the same time as the Aussie off the CPI, but take a look at that. It did pull back. So now the question is that a pullback as a buying opportunity, or should we look that as a sign of weakness? So right now, like I said, Aussie Kiwi is closing at the highs of the week. I want to go in next week with a little bit more stronger outlook on the Aussie compared to the Kiwi. So that's what I really want to focus on, is that focus on the outperformer versus the underperformer. So that's where we are.
And you're exactly right. And here's what I've loved about last week. Last week or 2 weeks ago, we had a whole bunch of stuff in the middle. And this week, it just separated. So now we have very clear pockets of strength and pockets of weakness. It gives you a lot of trading opportunities when you have it diverting this much to where you now have, Euro, Swiss franc, Aussie to go long, and you've got dollar, yen, and CAD to go short. There's a lot of combos in there that give you lots of trading opportunities. Now this is the trend score, a little bit longer term, velocity score. What's moving right here, right now? So if I was making a trade on Sunday, which I rarely do, but if I was, I would have to be saying, you know what, right here, right now, out of that group, I've got to be long euro. I don't want to be long yen because it's in a downtrend on a daily chart and it's just a bounce here. So I need to be long euro, and I can pair that up against CAD. So we have lots of trading opportunities this week, but if you're looking early on in the week, I really think there's only one trade to look at, and that's one Ankit mentioned earlier, Euro CAD. So I'm going to take a look at Euro CAD, and then Ankit, you can take a look at some of the pairs that you're watching. Jumping into Euro CAD. This is a daily chart, and you can see this is the kind of move you really like. You get nice continued moves. Yes, we had a down candle on Wednesday, but just candle on Thursday, or green candle on Friday. This is looking really good. So again, in these trends, look, 4 days, 1, 2, 3, 4. It's very easy to stay in a trade when it looks like this. Very easy to stay in a trade when it looks like this. You looked at the pound chart earlier, and the pound chart, it had 1 day up, 1 day down, 1 day up, 1 day down. Yes, it was drifting higher, but this is what you like to see. So the big question is you don't want to buy at the highs on a shorter term chart. So here we are. We've got, bases, breakouts, pullbacks, bounces. We are basing here. So we are getting a nice basing price action here. So I'm not going to go up to this peak here of 149.80. I really like 149.60 as an entry point. So for me, this is the trade, first part of the week. Long Euro CAD at 149.60. Ankit, what do you want to take a look at?
So let's just start with the dollar yen. And I want to emphasize a little bit on the dollar yen because, if you compare this to last year, the real turn in the dollar came, and if you want to go back, Rob, in November last year, the real turn in dollar came when the dollar yen started to tumble apart. You can see how we went from about 150 down to 120, 130. Again, an extreme move. I'm not saying it's going to same thing happen here, but it's important for dollar yen to move lower for a sustainable pattern in some of the dollar crosses. So you can see that we finally budged lower. And you can see, Rob, just want to point out on Tuesday when we had the CPI, right after that, we had a bit of a, engulfing candle. But after that, you can see we are rolling lower. Again, this is where confirming maybe dollar wants to go lower. And look at the price action right now. We're making a low base here. Again, this would be a inflection point where we might have to shift from dollar long to maybe dollar short. And instead of being always yen short, we might have to go a little neutral on that. So again, important currency to stay focused on. As long as it stays below 150, I think then dollar could stay weaker. So this is, again, an important one that I'll be paying attention to, making sure it doesn't get above 150. Euro dollar would be another great example of this one. If the dollar continues moving lower, I mean, look at that beautiful high base setup. I mean, it's already sitting at the highs of the day. We are officially breaking above. I don't want to get in a breakout on a Friday, but again, something to look into next week. But we talk about after every big move, what we look for is consolidation or pullback. This is a good example of a high base pattern. And if we switch it on the daily chart, I mean, what's the next level of resistance on this? You can see that if it can continue moving higher, it can easily get out towards that 111 area. I mean, remember, we were sitting at 113, 112 before it tumbled lower. So again, there's a nice level for this to reclaim before we can even run into some serious resistance. So this is, I think I love this chart setup. I mean, Rob, if you want to pull up Euro Yen, again, same thing. Euro Yen has been running and running. That what a nice little pattern that we've had here. So we could see the similar thing if the yen sort of backs off and dollar kind of takes its place. I actually foresee seeing the euro dollar kind of moving back that way as well. The second one, Rob, if you want to pull up the Aussie Kiwi, just want to sort of point out the relative strength of weakness. I mean, take a look at where we are. This week, I was actually looking at 108 area as an important level of support. And you can see we are now breaking above right at the parabolic SAR. This is, again, showing more strength and weakness to me. And, looking at last year, this is the time of the year where they will sort of deviate from each other. Remember, like last year, it went from 115 down to 105. I mean, that is an outstanding move. But not saying that this will happen this year, but again, it's showing that Aussie could get bullish, especially if we get above that 109.20. That's the line in the sand. If this gets above it, I don't mind even taking a bullish setup in the Aussie Kiwi pairing, even though they are similar. I would love to take advantage of that divergence. Again, looking at last year, you could have taken a big advantage on that divergence when went from 115 down to 103. So whenever they do deviate, they do have a big move, and it carries less risk compared to, let's say dollar crosses that could move on any sort of risk-off sentiment. So I would really pay close attention to Aussie Kiwi, but I think I like Aussie more than the Kiwi here. So these are the two I would wanted to pay attention to. Like I said, next week is all about the dollar in the first 2 days. And after that, we might just go sideways. I don't mind missing out much next week because after that, I think we go back on the full schedule and, there's definitely a lot to move on. So that's the game plan as I go next week.
Thank you, Wonkit. Great as always. So let's talk about wrapping this up. Holiday shortened week. It's not short for Forex traders, but for the most part, Thursday should be a real sluggish day. Maybe a little bit in the European session with those PMIs, but after that, pretty much don't even check back in until probably Friday morning. And again, Friday after the U.S. market closes at 1 p.m. should be completely dead until 5 p.m. So if you're looking to try to extend some trades and see if you can get them to go a little bit further, I don't think you're going to get it this week at all. I really think Monday, Tuesday, Wednesday is really the only period for decent trading, unless you want to try to catch that one currency that, again, could be Aussie, could be Kiwi later in the week. But I think the best trading is going to be the first 3 days. Thank you so much for joining us. Have a great weekend. Goodbye, everyone.